Ladies and gentlemen, welcome back to the channel. Tesla stock was up about 5% today. Now, here in today's episode, we're going to discuss the path ahead for Tesla, different scenarios that could be coming next for markets, and again, specifically for Tesla. We do have a big catalyst tomorrow. Tomorrow, we're going to hear from Fed Jerome Powell. Now, we're going to hear from a lot of Fed speakers this week. Fed Paulson, which is a brand new Fed official, gave his commenting and remarks around tariffs, inflation, Fed policy today. And long story short, he agrees that we should be cutting rates 2 more times into the end of the year. He doesn't think that tariffs are going to be inflationary. So we have another quote unquote bullish Fed official that is again raising the odds of many further cuts. But it's the first Fed official we're going to hear from this week, among many others. Jerome Powell is seen as the most important one and could create some pretty volatile moves tomorrow. But really what's going to move this market is, do tensions escalate with China or do they continue to die down? That's going to be really the main driver here. And I think Wall Street, to some extent today, jumped to the conclusion that things are over with China. And while that definitely could be the case, things are not over with China. There's going to be discussions, as Besson said, he is the Treasury Secretary, if you don't know who Besson is, that Besson says, hey, America has many more tools and levers they can pull, or, we can get these things settled. Besson says that U.S.-China relations are still well, okay? So it's still a bit of a wild card what happens next. And you need to be investing prepared for any outcome here, prepared for anything to happen. And we'll discuss that in today's episode. Now, we also have a clip from Tom Lee I want to share with you that was posted today to CNBC 8 hours ago. It says, quote, "There are a lot of reasons for investors to stay optimistic." So the work is cut out for us in today's episode. Ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. We are finding some huge opportunities within AI, energy, gene editing, all kinds of things. 2 stocks in particular in the energy or critical minerals, rare earth space. In the past week, we're up like 70% in these companies. One of those stocks today went up 55%. The other went up over 20%. Like, there's these opportunities that come on short notice, right? Where we are executing and making a fortune. I am not a financial advisor. I am not a financial planner. Come to your own conclusions on any and all stocks posted in the trading community or talked about on this channel. But hey, when you win, you win. And we are winning. So come join us if you'd like to. But with that said, let's get into today's episode. So again, as we kind of just talked about, like, Wall Street jumped to conclusions on Friday that, things are terrible. Okay. I mean, in the trading day, okay, that things are just like, we're decoupling from China. This is over. Keep in mind, Trump said or talked about massive tariffs on China on Friday, and he didn't actually confirm that, just threatened it on Friday. S&P fell 3%. Almost 3%. What happened Friday and after hours? Trump announced the 100% tariff on China. Stocks fell another 0.5% or so in after hours. Then what happens over the weekend? Trump says he's still willing to meet China's president. Besson says that relations are still good and that he expects things to, not get worse, essentially, right? Although says the U.S. is ready for things to get worse. Stocks recover. I think people were just looking for an excuse to sell stocks in the first place. Okay, one distinct difference that I've pointed out on this channel is that April 2nd was really a global trade war. It was really an attack on global trade. This is an attack on trade with China. Yeah, like different, still bad, but not as bad as what we experienced on April 2nd. Now, the odds are exceptionally high that things go back to normal, that maybe this even propels trade negotiations, right? Maybe this could actually be a positive for trade talks. Okay, maybe Trump just felt like he needed to, say some shit and get world leaders on their toes again. We don't know the exact reason for this. We don't know what is coming next. The only thing that we can decide and have control over is what we do about it. And what I'm doing about it is quite simple. I'm really not hedging right now. I want to stay fully exposed to the upside. I think the upside is more likely than the downside by a significant margin. I don't think Trump wants a recession. I don't think that is in his favor for any of the economic policies that he wants. That doesn't help Americans. That there's no reason why Trump would want to cause a recession. That would be like last ditch, last resort kind of shit, okay? I don't think that's Trump's game plan. I think it's somewhere along the lines of he wants world leaders to respect him and understand that when he says something, just his words can move markets. Like crash the Chinese stock market, for an example, right? Or the American stock market. He wants people to respect him, probably wants to get some of these trade negotiations speeding up a bit. Okay, I don't think it's actually about decoupling trade from China, and I think to a certain extent the export controls did kind of piss Trump off. Does this divulge into a recession or a materially weaker market? Probably not. Okay, but you need to be prepared for that to happen to some degree. Like, there's not a 0% chance of that. You need to be prepared in the worst possible scenario for that to happen. What do I mean by that? That means you don't want to be in margin. You want to have as much cash as possible. But when we are getting these red days, like we've seen on Friday, you have to be a buyer of those. Okay? You have to be a buyer of those. If tomorrow we have another big red day on bad headlines, you have to be a buyer of that. Because then you can see, like today, if you didn't take advantage of Friday at some of the lower levels, you don't have time to, buy stocks. Like Trump almost on purposely says shit after markets are closed. Okay? So that's my personal strategy, is I'm going to buy on these big red days. But I'm going to scale in. Okay? The lower markets go, the more I will scale in. Okay? If markets fall a lot, like 20%, then we're talking about using margin here, okay? Really 10 to 20% down is when I would start to initiate some margin, right? That's when I would want to leverage this market. But I do want to be adding on any red days. Now, Trump said don't worry about China. That's almost the equivalent of, back in late April when Trump said to buy stocks, to buy the stock market. Should have listened to that. I think we should listen when he says don't worry about China, but there's always that chance things could get worse. Now, that's going to be a developing situation. There's going to be different things that happen, okay? What we do know is tomorrow we're going to have some key catalysts to watch. At 6 o'clock in the morning, the NFIB Business Optimism Index, typically not a catalyst for markets, but in this environment where we're not getting economic data because the government is shut down, any and all economic data is kind of amplified, right? The data that we do get. Now, we're expecting a number of 100.5. Last month was 100.8. This has been recovering from the lows back in April at 95.8. How does the recent, bad headlines with China change this? I don't know, but it's basically expectations of business optimism, expansion, hiring, labor markets, inflation, blah, blah, blah. The better this is, presumably the better the economy will do, is the way to look at it, because expectations tend to precede reality. If you're expecting a recession, you're probably not investing, you're probably not hiring, you're probably being super conservative in the way that you spend money, which as a collective kind of is a self-fulfilling prophecy, right? Vice versa, if you're investing aggressively, if you're hiring, like that tends to lead to positive things, right? Now, at 8:45 in the morning tomorrow, Fed Bowman will be giving a speech, Okay, so another Fed official will give us their thoughts around inflation, economy, recent debacle with China. But Jerome Powell is going to be speaking at 12:20 p.m. tomorrow. Now, last week we had a scheduled speech on the calendar here with Powell. He did not say anything. Literally nothing. There was not a single headline that came out on Powell. So it's possible tomorrow is going to be another non-event, or it's possible Jerome Powell could really ignite this market. Now, we know Powell only has a handful of months left or so in his term as Fed chair. Okay, so to a certain extent, Wall Street, as we get closer to Jerome Powell, not being the Fed chair anymore, is not really going to care what Powell says. But we have the October Fed meeting, we have the December Fed meeting, we have the January, March Fed meeting, and I believe we have a Fed meeting in April. I don't know if Powell's going to be the chair by then. Maybe you guys will know down below in the comment section. But there is still Fed rate cuts to come with Powell being in charge. So Wall Street is going to care about what Powell says because Wall Street wants to see rate cuts. Now we're currently pricing in a rate cut for October 29th with a 100% certainty, a 99.3% chance of a rate cut, and a 1% chance of a 50 basis point rate cut. For December 10th, you're pricing in about an 88% chance of another rate cut, 87.4% chance here of a 25 basis point cut, and almost a 1% chance of a 50 basis point cut. Okay, or three rate cuts essentially by December 10th. So almost with certainty, you're going to be getting two more rate cuts this year. January is a bit of the wild card, and Powell could move the needle for January, considering we have a government shutdown. Powell probably gets the economic data reports. Like, I'm sure that's not far out of the realm of possibility for Powell to see those. So again, is Powell bullish? Is he dovish? Is he concerned about inflation? Is he concerned about the economy and the labor market? We might get some insight from that and from Powell's speech tomorrow. Although that's not a guarantee, and it could be volatile. Now, before we talk specifically Tesla stock and my expectations in certain scenarios and outcomes, I do want to share this clip again from CNBC from Tom Lee that says there are a lot of reasons for investors to stay optimistic. This one's a little on the longer side. It's 5 minutes, 59 seconds long. Feel free to skip past it if you don't care what some of the head voices of the markets are saying, but I think you should listen. And then after, we'll talk Tesla.
Markets bouncing back after Friday's drop. Joining us now, Tom Lee, head of research at Fundstrat Global Advisors and Fundstrat Capital CIO. Tom, just summarizing what your thoughts are this morning. I don't see a whole lot that has shaken your confidence that the market's headed up. You still see 7,000 on the S&P by year end. You do point out it's not cheap, up 36% since the April lows. You do outline some headwinds, but I think you're outlining more positives than negatives for the markets, even right now.
Yeah, in fact, I think JP Morgan's announcement today really ties into why investors should stay pretty constructive on the U.S. I mean, JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S., into things that are going to strengthen sort of U.S. advantages, critically important areas. And at a time when the U.S. is dominating AI, and of course now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic. And I know there's a lot of talk about bubbles, but I think the thing I would just continue to point out is NVIDIA trades at around 27 times forward earnings. It's still on a PE basis cheaper than Walmart and Costco, which trade at around 47 and 34 times forward earnings.
Yeah, you've got positive reasons to think that earnings are going to do well in a time when interest rates are coming down. So that's just like an elixir for stocks that is very powerful.
That's right. And as you know, CEOs have not been that confident for the last 2.5 years because the Fed's been running tight monetary policy. The ISM's been below 50 for 31 months now. That's the longest stretch in history. I think the sell-off Friday is giving us a bit of a gift because that surge in the VIX, a 32% rise, is the ninth highest ever one-day surge, and the 1 month median return is almost 3% of the 38 other instances. So I think the S&P could add 200 points between today and mid-November.
Still got, we're not overly positive in terms of sentiment right now, so that's not late cycle according to you at this point. And still a hated rally, $7 trillion on the sidelines if people decide they want to go into stocks.
Yeah, I think conviction is a measure of whether or not the market is, pricing in too much good news. I think with Friday's sell-off, I saw many people calling the top of the markets or declaring that the bubble is bursting, or that, this is the reason to be buying gold. And if investors are that quick to call a top just on a 2.7% decline, I just think a lot of good news isn't really priced in. I think there's still a lot of reluctant investors on the sidelines.
You have found a kind of everything's about crypto. You found a reason gold's up, and it's because of crypto. Not directly because of crypto, but you think the incremental buyer in gold there's gold-based stable coins, and people need to buy gold to back the stable coins. And that, you think that's enough to be up $92 all the way up to a new high?
Well, there is an interesting correlation we found, which is when I look at Tether's supply of dollars outstanding, it really started to rise about 3 months ago, and that corresponded with gold essentially going up every day. I'm not positive of this, but I think stablecoins, including Tether, may be one of the largest buyers of gold today.
That's perfect. So the people that have been bullish on gold for so long and bearish on crypto and Bitcoin, they're finally getting their big rally in gold, and it's because of the thing they hate so much, crypto and Bitcoin.
Yeah, that's right.
That's so funny.
Tether is proving to be a good meeting ground between Bitcoiners and gold people.
Tom, can you just explain, though, to the extent we can understand it, within at least the Bitcoin world, just how much leverage there is in that system? Because I think one of the things that we were looking at Friday was the possibility, at least, that some of that selling, or maybe even a lot of that selling, came from margin calls at that time.
Andrew, there's always been a lot of leverage in crypto. I think that the volatility and leverage is what has drawn people into that space, especially when you get outside of Bitcoin and Ethereum. Those two are generally not held on margin. I mean, there is some leverage with what they call perpetuals, but that's why they held up so well over the weekend. But this liquidation that was triggered over the last 3 days, the estimates are at least 19 billion of liquidations, but it's probably understated. It might be 4 times bigger. It's the largest since 2021. Essentially, you have to go back to FTX. I think there is a lot of leverage in the way people use this product called perpetuals, which is trading on margin, like 3x, 20x. And it lurks and it's held through collateral. People like sort of pledging something that think it's safe, but when the price of that collateral drops, it triggers a cascade. Right. And so I think people talk about this thing called auto deleveraging. So a lot of leverage, yes.
Now, in the optimistic scenario for Tesla stock, if tensions die down and we get back to my base case assumption of 2 rate cuts this year, inflation that continues to trend lower, economy slowly starts to get better, consumers slowly start to get better, and really my general expectations for Tesla being you have the shareholder meeting November 6th. Elon's compensation package is going to be approved. The XAI investment is going to happen. Great. But I am expecting between now and the end of this year at least one more city to get robotaxi capabilities. That very well could be Dallas, Texas. That is where it's starting to lean towards. And the Cybercab is getting ready for production and ultimately going to launch autonomous ride hailing without humans in the front seats early 2026. Great. That's going to be a big catalyst for Tesla. But I also think that Optimus is likely going to improve. We're going to see more updates and commercial deliveries start in 2026 as well. So that's I'm definitely expecting an update there between now and the end of this year. Now, I also believe that the EV tax credit, while it did benefit Tesla a lot in Q3, a lot of that demand is pulled forward again into Q4. So from a delivery perspective, even though it's a lot less important for Tesla these days, Tesla, by the way, smashed estimates for Q3. The bar is really low for Q4, like really low. Everyone's expecting a drop off in deliveries. Q4 is normally Tesla's like organically the best quarter. So mixed with the rules of the tax credit stating you only have to make a deposit by September 30th, a lot of deliveries are extended into Q4. And organically, it's not like everyone knew about the $7,500 tax credit out there, right? Like if you're invested in Tesla, obviously you did. If you were in the markets already to buy a new vehicle or knew somebody that knew about it, perhaps you heard about it. But I think people really overstate the $7,500 tax credit. To me, it doesn't look like it was just insanely widely known information. Like, you might think it is because you're in the markets, but go ask random people if they knew there was a $7,500 federal rebate, essentially, for buying an electric vehicle that just ended on September 30th. Likely, if you ask 100 people, 95 of those people are going to say, yeah, I had no idea about that. Okay. So, again, how impactful is it going to be? How negative is it going to be in Q4? I would argue that there's probably an upside to delivery. So in this scenario, if I'm correct or mostly correct on these expectations, I think Tesla's going to be well into the 500s by the end of this year, maybe as high as $600 a share. Oh, I should also mention, in my base case scenario where tariffs do not go into effect on November 1st on China, the 100% tariff, that there's, a settlement, that there's some collaboration and an understanding that the tariffs are not going to go into effect. Maybe China makes some concessions as well. I think that's the base case assumption at this point. In that scenario, Tesla is as high as $600 per share by the end of this year. Maybe higher. Again, if everything I say happens, Tesla could be higher than $600 a share. Okay? Now, if part of what I say happens, but maybe tariffs do go into effect November 1st, but they only last a week or two, and then it's resolved, Tesla will trade lower from here. Tesla will fall back into the 300s, but then likely recover to probably around where we are today by the end of the year. You could see a move down to 340 again, 330, and then a move back up into the 430 to 450 range by the end of the year. If part of what I say, about Tesla actually happens, but the tariffs go into effect on November 1st and last into the end of the year, Tesla could be in the 200s, right? Because then you're starting to talk recession. 2 months with a trade embargo with China, with, in the worst case scenario, no, ending coming to that. Wall Street's going to start to draw recession conclusions. Now, things got better today, right? So that worst case scenario, I think, is very low likelihood. And I think ultimately the problems, the issues will be settled between the U.S. and China without the tariff needing to be, put into place. But you need to be prepared for anything to happen here, right? This is not the market. You want to be a perma bull or perma bear. You need to be fluid with your understanding of the situation. Now, again, what I'm doing is legging in on the red days. Okay? Not really hedging my portfolio because I don't want to miss out on the upside when it happens, because I think that's the highest likelihood of happening. Now, if you are bearish and you do not agree with those assessments, then you need to be careful, right? You need to be careful trying to hedge out this market thinking another 20% decline is coming, because odds are that's not going to happen. In fact, you've never had two 20% declines in 1 year. It would be historically unprecedented. Okay. Also, if you're bearish, you need to be careful if stocks fall and you're not adding. I know a lot of people try to time the bottom and all of this. You're not going to be able to time the bottom. The news is likely not going to come out of, tensions ending between the U.S. and China, for lack of a better, broader term, in regular trading hours. It's most likely going to happen in after hours, late at night or very early in the morning, and you're not going to have time to react to it. So I think the highest likelihood of walking away from all of this, a winner, is buying on the red days, and the lower the market goes, buying more and more. Allocating more, the lower markets go. That's what we did back in April, and that made me hundreds of thousands of dollars, right? Collectively in the trading community, we made millions off of this. It would be a blessing to have another 20% decline. I hope we do. Are we going to? Probably not. Even though I wish we would, and I can wish all I want, you got to look at the facts and you got to leave your emotions out of it. That's why I say, as long as you can get your emotions in check, separate what you want to happen from what is most likely to happen, you're going to make a fortune. I want stocks to crash. I own a lot of stocks, but I know I would make a shit ton of money on that recovery. Okay? I want stocks to crash for a year. I want to have a year to plow money into this market, and then we can recover after that. Great. Is that going to happen? Probably not. Am I investing like that's going to happen? No. Because that's not the highest likelihood. As likelihoods change, your investing allocation should change as well. But at this point, things are probably going to get better. And you have to take advantage of the red days when you get them. So let me know your thoughts on all of this down below in the comment section. Keep in mind, none of this is financial advice. I am not a financial advisor. Come to your own conclusions. Do not be a jackass. Check out that link down below in the description of this video. If you are not a jackass, if you want to come invest alongside us, come join us for this multi-year, decade-plus long journey that is ahead of us. Have a great rest of your day, and I will see you in the next one.